the thing here is the bank's interest basically is consistent with what the central bank, like the Bank Negara, in terms of their OPR. So if the OPR increases, the bank have to increase their rate. Of course, how they actually do it, they have the base lending rate plus the markup profit, which is part of the interest revenue. So that base lending rate is actually consistent with the overnight policy rate of the central bank. So if the OPR actually goes up, the bank interest overall, BLR plus the markup profit, will go up, and vice versa.
I guess we can start now.
Yeah, sure.
3, 2, 1. Ladies and gentlemen, welcome to another episode of On the Lawn with FVR. Today we have Dr. Liew. Thanks for doing this.
Yeah, welcome.
We got the chance to finally create an episode because we met back in October for the Inspire event.
Yes.
Which was a wonderful event.
Yes, truly, yes.
And now with the new year coming on, and these ornaments, these banners are just telling it's going to be the Chinese New Year very soon. We just discussed a little about the aspirations of the new year, and you mentioned about the research. So can you tell us a little more about yourself?
Okay, my name is Dr. Liew. I'm currently working with UCSI University Malaysia. I've been working for them for about 4 years. And I'm actually a finance lecturer at the university. And I teach subjects like corporate finance, derivatives, portfolio management, and also investment management for FinTech. So my job will be teaching and of course doing research as well, and of course some other administrative duties assigned to me.
This is very specific because you are discussing about the finance and also FinTech and portfolio management, which is right now a lot of people trying to get into after the news that we got a week ago. With that in mind, I would like to ask you, based on your expertise, this question is right now going around the internet. What is your point of view? Which is your position about the new disclosed Bitcoin ETFs?
Well, I think in general, in the context of the Malaysian investment environment, I think all these cryptocurrencies are still new to the investors. That's one thing. And in order to encourage people to actually invest in Bitcoin, in my view, I think it takes a lot of effort, especially after a lot of cases in other countries like the US, the so-called the cryptocurrency exchange scandal and so on, and also the case on Binance and so on. So it takes a lot of effort to actually convince people now to actually to invest in cryptocurrencies like Bitcoin. And even with new disclosure regulations, I think it will still be there's still a lot of work to do, to get people invest in this kind of financial assets.
Yeah, that's a very good disclaimer, because one thing is the hype, another thing is the practicality of the asset to give you particular returns. FinTech, and how this technology has been evolving through the time. Can you tell us which has been the highlights that you have seen in the last couple of years?
I think FinTech has developed in a quite strong manner, at least in this country, and of course in elsewhere as well. And the thing here is people start to acknowledge the benefits of financial technology, particularly from the perspective of financial inclusion. And of course, the providers of these financial services as well see the benefits of this to provide financial services and solutions to people far from the urban areas, for example, in the rural areas and so on. So in that sense, there is a positive direction that people want FinTech to actually grow, So, and in actual fact, I believe it has been actually growing quite strongly in this country, and of course in other countries as well, as I said, because of the accessibility that is given to those people who, traditionally for some reason, they do not have access to traditional finance. So FinTech provide an avenue for them to access financial services, to get their capital, start their business or to expand their business and so on.
It is a very paramount, the disclosure that we are telling that fills the gap, especially to access and also to make payments. Because I can recall every weekend when I go to the bazaars, and it's like very humble people trying to make a living selling you stuff that you can eat. And sometimes they say cash or QR. And QR happens to be the QR code, an element that is a product of the FinTech, which I don't see in many other places. Like people just getting used to tap the card, but it's like you don't have the machine, okay, or the machine doesn't work, or they don't have the replacement. The simple QR helps a lot. And I can recall back in November in the Singapore FinTech Festival that now there is like inter-country QR codes. Can you disclose or tell us a little more about this paramount technology?
Well, if you talk about this kind of digital payment, I would say, for transaction payment and so on, I think it's still in the beginning stage in terms of the Malaysian context. And like what you're talking about, I mean, in what happened in Singapore, I think I'm not surprised because Singapore is far advanced compared to Malaysia in terms of digital payments and transactions. And I see that the pathways actually will grow very fast because people will see that digital payment provides a lot of benefits because you don't have to carry so much cash, which is actually very risky, from an individual perspective. And also, digital payment enhance the efficiency of payment transactions, not just from an individual perspective, but between corporations as well. And from there, you can extend to, from an international perspective, cross-border transactions becomes much more efficient. But of course, with all this, there comes a lot of risks involved, like cyber security and other kinds of security risks, which the authorities like the government need to look seriously into to provide protection and safety to the to all the consumers and the companies that are involved. And if you talk about digital payment, I think if you look at other countries like China, for example, they are way in advance. So, for example, in China, when you buy anything, is almost that you can actually pay digitally almost everywhere, even you take a train or take a flight or book a hotel or go to McDonald's, buy a hamburger, go to a restaurant whatsoever, or go to tourist scenic places, everything allows digital payments or transactions. So I think, I believe at least, since Malaysia is on the, in the Asian region, I believe we are also moving in this direction, which I think is, there's nothing wrong with that, except of course the security risk that I mentioned. Otherwise, I think it really increases efficiency and of course the trading process, and overall it can enhance the economy of the country.
It's true. The opportunity to enhance the economy of a country reminds me of a paper that discussed about the total factor productivity, which was not in the amount of people, but is the people ready to adopt the new technology and produce more, which is very important, especially in this day and age.
I agree with that.
Now, during your classes that you give at the universities, you mentioned different topics, and I want to right now delve into portfolio management. For the ones who are not initiated in this, can you tell us what is portfolio management?
Well, portfolio management is basically how you manage your investment portfolio. And basically, what I teach my students, basically, there are basically two basic methods. One is active investment, the other is passive investment. And for each of these, for example, active investment, there are certain paradigms and understanding behind it. For active investment, the belief is that investors think that they can actually make a profit from the market. They can beat the market by doing analyses, like fundamental analysis, for example, or getting certain kinds of information, or maybe do a very thorough analysis of the market, and also, of course, choosing the best financial assets and the components, all those kind of things. So that's called active investment. On the other hand, for passive investment, these are the people who believe that they cannot beat the market, and the markets are efficient, and the prices of the assets are basically fair, So for passive investment, for example, there are actually a lot of financial products out there that adopt this principle. For example, the exchange-traded funds, like the stock index, and of course, for portfolios like mutual fund and so on, which are well diversified. So they also believe, in this kind of investment technique. For active investment, these are for the people or investors who prefer to take higher risks. They don't mind to do that. And for example, people like hedge fund managers or those those active investment managers who really take a lot of risks, or those speculators, individual speculators. So for these kind of investors, they're really on this kind of active investment method, and because their target is to make a lot of money. And the thing here is, for them, taking a lot of risk is one thing, but they do not take any offsetting position to protect themselves. So that is their daring part of it.
Yeah, that's right. And hedging happens to be one of those techniques to cover any part. But also, we need to discuss that at least in Asia, we see a lot of long-short portfolios. Most of those are long, because the typical question that when a manager wants to do a long-short position is like, which is your collateral, or how you're going to do or cover your spread, which is the main way why. I remember that there was a research point: 50% of the long-short portfolios die because they don't have enough coverage. You mentioned the active and also the passive investment. I need to recall right now what I've seen recently, that now all of a sudden the banks are giving 4, 5, 6% as a result of this new wave of investing. What is your point of view about this new movement by the banks?
You mean the banks provide what?
Now they are paying 4, 5, 6%.
In terms of the interest.
Uh-huh.
The thing here is the bank's interest basically is consistent with what the central bank, like the Bank Negara, in terms of their OPR. So if the OPR increases, the bank have to increase their rate. Of course, how they actually do it, they have the base lending rate plus the markup profit, which is part of the interest revenue. So that base lending rate is actually consistent with the overnight policy rate of the central bank. So if the OPR actually goes up, the bank interest overall, BLR plus the markup profit, will go up, and vice versa. So, like what you say, the banks providing 4, 5 to 6%, that shows that that's basically, that is actually in total, including their interest revenue. I wouldn't say that is anything, something that is really substantial, profitable to the depositors or investors, because their interest actually consistent with what the OPR that the central bank set. So it's nothing, nothing interesting about that, or nothing to say. Nothing special about that. In other words, in fact, people put their money in the bank. These are the kind of people, they are very risk averse. They don't dare to take a lot of risk, and that's why they put a lot of money in the fixed deposits, for example. So. And of course, banks not only, the fixed deposits is one thing, but they also act as an agent to sell other kinds of money market securities, like for example, repurchase agreements and letters of credit and so on. So in that sense, I would say, people who put their money in the bank are not so risk takers. I say, those are the people who are very risk averse. They want to park their money in a safe manner. Because if you look at the current inflation in the country right now, or even in other countries, putting your money in the bank, doesn't really, make your money catch up with the inflation. So I think to be wiser, if you're talking about if interest rate goes up, it's better to put your money into other kinds of fixed income securities other than putting the money in your bank. So I think that would earn much more higher interest income.
It's true. Now, this is from the side of the passive investment. The active investment usually tries to beat the market, And I remember it is a quote that you don't want to be as big as the market, because then you cannot be the market, because you become the market. Especially for those hedge funds that are trying to get the 10% or the 20%. So how can you reduce the temptation to be as large as the market?
Um, well, if you talk about earning a return as large as the market, I think I'm not sure what you're referring to. I mean, is it referring to getting a return consistent with the market return? If that is the case, then you're not beating the market. You're earning a market return, and in that sense, might as well involve in passive investment rather than active investment. That's the understanding from the portfolio management perspective.
Exactly. That's for that point of view. Like we're talking about those other funds that they always outbid the market, but the assets under management sometimes they need to say we cannot manage as much as this because otherwise we cannot beat the market.
Well, for like what you said, the hedge fund managers, their objective is to beat the market, and basically, from my understanding, they do whatever that they can to actually achieve that goal, because their job is to earn a higher return. So in that sense, they take more risks, as I said, without any protection at all, without any offsetting position, and usually these hedge fund companies. They invest in countries with higher risks. And for a very good example, like if we talk about, if you still remember, so the so-called long-term capital management for the U.S. hedge fund, and they invested in the Russian financial markets, and unfortunately, it didn't work well. They lost a lot of money there, and that involved U.S. Taxpayers' money as well. So in some sense, it can be very, very risky, but the fact of the matter is that they will go whatever way that they can do to beat the market, and not just beat the market, but they earn very, very high returns. And they analyze many countries around the world. They choose those the ones that give them the highest returns. Of course, it doesn't come free; it comes with high risk as well. And you can see the LTCM is one example of it, which unfortunately it didn't work well in the end.
It's true, and also every year that passes by, it gets more and more complicated. I remember watching the news a week ago that the top hedge funds, only 2 or 3 were able to beat the market, and everybody was just at par or subpar. And it's like a race that few people are just getting the benefits anymore. Now, to do this kind of analysis, people usually do the fundamentals, but there is also quantitative analysis.
Yes. Well, nowadays, with the AI technology, I think, of course, quantitative techniques comes in a lot. So that forms the so-called fundamental analysis as well. And that's why if you look at institutions such as investment banks, for example, they hire a lot of people with very strong technical backgrounds, like engineers, mathematicians, and so on, economists, of course. And these are the people who can do a lot of quantitative analysis. The same applies to those hedge fund companies. They also hire these kind of people to do a lot of quantitative analysis to make sure that they get the best returns.
That's right.
Yeah.
There is also a caveat. I remember that quantitative analysis is a function of the amount of data and the quality of the data that you have. For example, years ago, to do quantitative analysis in a market like Indonesia was like a double-edged sword, because there was not so much data back then, like 20 years ago or 25 years ago. But nowadays, it became easier.
Yes.
So that means that as technology compounds, there might be maybe other techniques moving on.
Yes, I totally agree with you. Now with the big data analytics, it becomes much more convenient and efficient to analyze data, and with the AI technology, it becomes much more efficient as well for the analysis part to be executed. So, in fact, I think if you look in the market now, like in the Wall Street in the US, the algorithm trading has been there for many years. And with the AI coming in, I think it will become much more efficient and specific in terms of catering to the buyer and seller, what they want actually, how much returns that they get in terms, by the investors, how much they require and so on. So AI will, I think in the future, will dominate the whole financial scene, if I'm not wrong. So
Given that perspective, I need to ask from your point of view that you are in the research front, which will be the limitations of the influence of AI in this field?
I think you might have heard of it. I mean, there's of course a risk attached to it in terms of the misuse of AI. The deceptions and other kinds of negative things that can, people abuse it and so on. Um, so, um, so this is one of the risks that I think governments and authorities need to look into. You know, and if you look at prestigious universities like University Cambridge and Oxford, they are actually emphasizing AI, but the usage of it in a responsible manner. So ultimately, I believe responsible usage of AI should be the target of the future, for anybody or institutions that use artificial intelligence
That's
in
right.
whatever field, not just in finance and so on.
That's a very good point to discuss. Always to keep that in mind, because there is always the other side of the debate that they say AI is using a lot of energy, that AI is unsustainable because it uses a lot of electricity. So there are moments
I
that
think that is referring to Bitcoin actually. I think I
ah,
read some studies that Bitcoin uses a huge volume of amount of water. So that is certainly not sustainable.
that's right. The problem is that there are only 21 millions of bitcoins, so there's not going to be a moment that the miners cannot mine anymore. But for AI, it's like we are still
Yes, yes,
growing.
yes, definitely. You just look at the stock price of companies like Nvidia that produce the chips for the AI. Look how high is it, the stock price. And of course, I think people are still putting in money on AI stocks. And there's still a lot of growth. So you want to make a lot of money, probably you need to invest in AI stocks.
Or the supply chain behind the
Yeah.
AI, which is in this case the chips, or the
Yes.
companies who are given the materials to do the chips.
Yes. 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 Exactly.
Now, let's step back for a moment and let's discuss about your upbringing. Like, how was your early days and what made you choose to make a career in this?
Okay, that's a very interesting and good question. Well, actually, after my MBA, I did my MBA in 2001 and I completed in 2004. I did it at University Malaya actually. So after my MBA graduation, um, so I try to apply for jobs in the market, and suddenly university offered me a job, a private university, so I just take it up. But that was an academic job. So from then on, that's how I actually became an academic since 2004 until today. Uh, you know, uh, for my career. And I find it interesting in the sense that if you talk about, I mean, in let's say in this business field, it's actually very diverse, and it actually is not static. It changes over time, and new knowledge comes in. And the fact of the matter is that uh, you can no, I mean, just my viewpoint, you can no longer just be comfortable in a certain field that you have studied and you think that you can apply it in the future. I think the trend now is actually towards interdisciplinary studies and research. So you cannot see things from a silo perspective, which I think still a lot of people are doing that. So for example, let's say you're a accounting graduate or finance graduate, so probably you need to have a perspective from, let's say, the scientific part. If let's say you talk about climate finance or sustainable finance and so on, or sustainability for that matter. So there is a need for a continuous learning, I would say, and so that basically create a lot of interest in my career, because now I'm involved in sustainable finance, climate finance, which requires me to learn up a lot of knowledge about the environment, ecology, which is basically totally different from the traditional business courses that I learned last time. So in the business degree or MBA whatsoever, right? So last time when I do my MBA, there's no subjects like climate finance. I believe now they have, so things changes over time, and of course with the advancement of AI technology, so I need to keep up with the trend as well, So I'm also taking up courses to learn about AI, ChatGPT, and so on to make sure that I updated in the latest techniques, latest methods to analyze data or obtain information as well. So that I think that's very important for a career in academic, So because you need to always keep yourself updated over time.
It's very refreshing what you're saying, which is to keep updated.
Yes.
And it reminds me of a quote that is like, you have to always keep going because the moment you slow down, you go down.
Exactly. Yes. Because they're saying that the strongest belongs to those who are the most adaptive.
Hmm. And the adaptation is not because you are strong, but you happen to survive the environment and you adapt and take the best from the scenario.
Yes.
That's true. Now, given the opportunity that you had and what you have seen during these years, which has been the thing that caught your attention the most?
From in what sense and from what perspective?
For example, we mentioned that during your time doing the research and doing classes, you found different trends that evolved through the time. From those trends, which was the one that got the attention the most?
From my perspective, I think it will be sustainability. Like I said, the traditional business courses, they don't have, they don't never touch on sustainability in the past, even from my own personal experience. So I think gradually students need to, learn about this so-called sustainability and ingrain it into their education process, into the subjects that they learn, so that at least they have a strong awareness of maintaining sustainability in whatever field that they actually graduate. So I think that is, to me, something that needs to be changed in the academic industry. Not just for business courses, but for other kinds of degrees as well. Like what happened in my university, I think they are fostering sustainability into almost every aspect of the different educational degrees that they provide to the students. And I believe that is currently the trend now in other universities, if I'm not wrong.
I have seen the same trend also when you want to do investments, or even right now. This is very, very peculiar. Coming from the US oil and gas industry, we do a lot of oil and gas drilling because that's how you get the petrol, you get the gasoline, you get the other derivatives. Here, when I say oil and gas, everybody's like, oh, that's bad, don't do that. The moment that I say LNG, everybody's happy. And that's a consequence of how the sustainability has been immersed, because it happens that liquefied natural gas is a consequence of drilling for gas wells. And that also seen this parameter when people are doing investments, they want to do sustainable investments. And they want always to say, okay, how much is actually benefiting the environment versus something than just elements of return. It is permeating right now everywhere, which is very interesting, to be honest. Given that perspective, I need to discuss with you a very polemic topic that many other people have been trying to call out recently. What is your point of view about ESG?
Okay, that's a very good topic. Actually, there are a number of different views on that, based upon my, studies, analysis, and readings and so on. Of course, the most famous one, actually, you don't talk about the term ESG first. I think that is just a term to actually represent responsible business. I think that's a lot of things. That's one thing that I think a lot of people need to understand. And actually, there's one very famous book, I don't know whether you've read or not, by Professor Alex Edmonds from London Business School. The book is entitled Grow the Pie. So that book is actually one of the best sellers, I think, probably all around the world, including the US. So that book basically says that if companies actually, the so-called grow their pie, in a sense that, increase their their benefits of their governance and how they manage the firm, give more, so-called, not just financial benefits, but make it much better for their employees and also for other stakeholders, for customers and, for other stakeholders that they deal with. So in the end, these companies tend to be more profitable in the long run. So that is basically from that book. But the thing here is that book is based on a sample of the top, the big companies in the US, the S&P 500. So the thing here is what is missing most from the element of responsible business and also ESG is how do smaller companies in other parts of the world, for example in Malaysia, how can they actually so-called grow the pie, so-called, and all basically execute ESG in a very effective manner to actually to make sure that all the stakeholders are happy, satisfied, and they become profitable in the long run. So that is actually something I don't think there is any proper solutions yet, at least. And so this is something that I think a lot of companies and even scholars and researchers like myself and others need to look into. Of course, there are some research that actually found that smaller companies, they tend to adopt ESG due to other kind of factors, nothing to do with finance. But I think that is still contextual, at least because there's one actually new research in Malaysia done from University Malaya that found this out. But that is still contextual in the Malaysian from the Malaysian corporate environment, and whether it's applicable to all companies in all industries still remain a question mark. But the main issue here is, to me, in my view, and also practically from the corporate perspective, is the cost issue. So it's not really cheap to implement ESG effectively, particularly for smaller firms. If you talk about bigger firms, they have more cash. I think shouldn't be a problem for them to implement all sorts of programs for the benefits of their employees and other stakeholders. But for smaller firms, it could be a barrier. So in that sense, I think the government needs to look into this issue, provide some form of assistance and, of course, awareness as well, to actually assist these smaller companies to actually have a proper ESG platform. Of course, they can give financial assistance by the government, but of course, it's not just that. They need to give technical expertise, know-how, all those other kinds of skills as well, to train the managers, employees of these smaller firms to implement ESG in a proper manner. So I see that as something important, at least in this country.
It's very paramount what you're mentioning, because one thing is that there is a metric that helps businesses and to grow the pie, and at the same time, this parameter should not make the poor poorer.
Yes.
And to me, it's like, how can you create more prosperity and more economic opportunity in time of peace, in the times that we are living right now? That's the best way to compete. And if you begin to say to the normal person that is on the bazaar that now they need to put more of their returns into an ESG thing, they will think it twice,
yes,
even if the government is trying to push it, because they need to provide for their family. So that will be one caveat or a small asterisk. And another small asterisk is this book by right now Republican candidate Vivek Ramaswamy called The Woke Incorporated, and he discusses how ESG happens to be a little detrimental for SMEs because they want to provide, but sometimes the floor is too high for them to actually
I totally agree with that.
And also number 3, this is something that I began to see through the sustainable investment, and people may say I'm a little polemic, but I began to see that there are certain factors called the ESG factor that is 1 or lower than 1, and they began to put that factor close to the net present value of a company. So after they got the analysis, they multiply this ESG factor that has so many standards, and sometimes makes the companies with a lower valuation that they originally have, and with that price tag, people who already have the cash, they begin shopping those companies. And I'm like, how are we actually gonna keep this sustainably through the years? Because some companies, they just want to keep things moving, and then there is a metric that is still debated, and then all of a sudden your valuations go lower.
Actually, in my view, there is actually a trade-off, at least in the short term. So the returns won't come that fast. So in the short term, the returns might be lower, but from the investors need to be a little bit more patient because the returns usually comes in the longer term, because ESG doesn't, I mean, the outcomes of ESG doesn't, it only materialize or takes effect if you look at it from the long-term perspective. It takes quite a number of years for to get higher returns. It doesn't just come automatically.
I'm glad that you're bringing this word, patience, because when you are in the world of investment, active investment, and portfolio management, that's the number one element, because you want your investors to be patient.
It depends whether you're short-term investor or long-term investor. So of course, for short-term investors, they want the profits and returns fast, because that's their nature, So, but for long-term investors, I mean, they are not a problem for them to wait for 5 to 10 years, for the returns to come, and that's where I think ESG, the returns will come in that span of time.
Mm-hmm. It's good that we have this small discussion. Now that we are discussing things that happens in the region, just been here longer than I am, so I need to ask you, which are the small differences that you see between Malaysia, Thailand, Indonesia, Singapore? Which are the small differences people can see in the region?
I think that's a good and, of course, important question. I think you might have heard of it. I think Malaysia still needs to catch up a lot in terms of foreign direct investment compared to our ASEAN neighbors. And of course, in terms of public governance as well, I think Malaysia has a lot to really pick up, because our ranking is really not so good compared to countries like Singapore, for example. So, and that basically, now you may ask, what does it got to do, I mean, the public governance got to do with foreign direct investment? I think there is a so-called link there, because if you don't have good public governance, why would investors, put your money into the country? Because investors put money into your country so that, I mean, because they are confident about the way that your country is managed, and they are confident that they can get sufficient and, of course, huge returns from their investment. So if your if your country is badly managed, very poor governance, corruption is very high, do you think that will attract foreign investors? I don't think so. So and that's why a lot of investors, of course, you know as well, they flock to Singapore because they believe that the Singapore system works, although it's just a perception. But of course, you look at their transparency index ranking, they are ranked very high, way above Malaysia. So, and of course, that governance factor also affects the strength of the currency. And if you look at the Malaysian currencies now, of course you heard of it, and many people said it's relatively weak. I mean, if you compare to the Singapore dollar is basically stronger than the Aussie dollar. But this doesn't happen in a split second. There are many factors that actually cause the currency to be weaker, and in my view, I believe one of those main factors is the 1MDB scandal that causes investors to actually take a lot of capital out from the country, that causes the Malaysian ringgit to be relatively weak, like what is occurring today.
Mm-hmm. Yeah, the 1MD, the George Soros thing back in many years ago, and how IMF wanted to enter. That's are like talks for another moment. Like there's right now documents and things like that. Documentals, I'm sorry. Something I saw is that across the region, there are two elements to analyze a currency, which is the strength of the currency, like how hedged it is or pegged it is versus the dollar, or selection of currencies, and also number two, the volatility, how volatile currency is. You mentioned the Australian dollar. It's true. Australian dollar for some reason happens to be closer to Singaporean dollar. The problem is that Australian dollar is more volatile, and it's like I don't see many people trying just to buy the Australian dollar. That's number one. Number two, something that I saw because I traveled to Philippines, Indonesia, and also Thailand, is that Malaysian ringgit is a little more stable than these other currencies. And the more that I began to see these other places, and people can see in a playlist that I have that I did some small essays about those places, It's like the more that you see those behaviors, it's like, okay, I appreciate a little more the Malaysia ringgit. Like for example, I cannot believe that. Imagine this: that you're in Indonesia and you want to drink a cup of coffee, and somebody say it's gonna cost 30,000 Indonesian rupiah, and you are like, so how much is that? And then you say, okay, you peg it to the dollar will be $1 is 15,000 Indonesian rupees, but it's okay, so it will be around $2. It's like a little too expensive, and it's like, okay, how much it is compared to the Malaysian ringgit, and then you begin to do the numbers, and then you begin to see a trend, and it's the stability of a currency through long term, like a second variable to analyze, that brings a little more confidence from what I see here. Of course, the element of governance is paramount because if you don't have that clear governance, how can you attract investors? And also, number three, innovation. I began to see that it's right now like a huge race between countries like Vietnam and Indonesia versus Malaysia. Like innovation is the name of the game at the moment.
Yes. Well, I totally agree with you because the reason is as technology advances, countries need to go up the value chain. So traditionally, Malaysia is more like towards the assemble manufacturing, which is actually at the lower end of the value chain. So we need to actually goes up the value chain, and so are other countries as well. So and that's why, as you said, the race is there. So like for example, with the advancement of AI, so now Malaysia is actually try to attract more companies that that are related to AI to invest in Malaysia, and also companies that are related to a greener environment, sustainability, like for example Tesla, to produce electric cars. So and we somehow managed to get Tesla to to invest in Malaysia. So these are some of the positive things that the Malaysian government did. But the fact of the matter is that the Ministry of Trade of Malaysia really wants Malaysia to really go up the value chain, and that's what I read from all the articles, in the newspaper, in the blogs, in LinkedIn, and so on. And I believe that is something good for the country's economy because we cannot, compete at the lower end of the value chain anymore. It just doesn't make sense because as time changes, as technology changes, we really need to raise ahead, go up the value chain, and show what our strengths are in terms of, from the Malaysian economy that we can contribute to the rest of the world, and of course, hopefully attract more foreign direct investment.
That's a very nice way to put things up. I want to right now analyze a little more about your journey. And there were moments in your career that you made decisions. I would like to ask you, which was the most challenging decision that you made and why was that?
Okay, I think in terms of choosing the field of my study, I would say the most challenging decision. And after I get into academic, and I chose finance. And why I choose finance? Because I think it's a dynamic field, and also related to economics. And of course, now it's not just related to economics, related to environment and many other fields as well. So that's basically probably, since you asked me, that's probably my biggest decision. And now, of course, I'm satisfied with it right now with my career progress, because finance play a huge role in the economy and in other aspects of growth as well, in other industries as well. So without finance, without capital, nothing can be done basically. And so now with the sustainability perspective comes in, so how can we actually raise capital or provide capital if you are the capital provider to, how can we provide capital to businesses or companies that basically can protect the environment. So now that's basically the key thing, if you're talking from the perspective of the capital provider, like the lenders, the banks, all those things. So that's why now you have the green finance, green loans, which is very important because, as I said, without capital, almost nothing much can be done in terms of economic growth, businesses, and so on. So if, let's say, if the capital is channeled to those businesses or industries that provide more emphasis towards protection of the environment, I believe, our global environment can actually improve drastically. If only that all countries actually, do this kind of thing. And of course, we have the so-called the Paris Agreement, the COP28, the recent one in Dubai. But I believe action is much more important. It's not just coming here to discuss, coming together at a gathering and discuss and so on. So action by each and every country to give more emphasis on renewable energy, green financing. Every country has to play its part. It's not just the bigger countries, because some people say because their emissions are higher. I think all countries has to play its part, because if we don't play all up, if we all don't play our part, then I think our world will not have a better place for the future generations. So you look at even smaller countries like Singapore, so their emission is nothing. It's very small compared to US or China as well, but they play their part in all these sustainability issues. And I believe Malaysia should take the same pathway as well. So we should all take responsibility for what the world happens. Even if you, from the US perspective, for example, even the White House said they are willing to work with countries like China, although there are a lot of differences now, but they are willing to work with China in terms of environmental issues as well. And that is something I really totally respect with regards to. And I believe that should apply to other parts of the world, other countries. So if you, I don't know, I'm sure you have taken economic subjects before. There's this so-called theory in economics called the tragedy of the commons. Mm-hmm. So in this theory, it says that, companies, individuals do not care what is, in terms, if it's a public good, there will be less care upon that. This is what you call externalities. I think this should be, gradually eliminated. So we should not so-called, see that things that we take it for granted, like the air we breathe and so on, is free and so on. We should, not take things for granted, and we should put in a lot of effort in protecting the environment. Mm-hmm. I think all countries need to play their part.
It's wonderful to hear a reflection like that, because many times we give by granted that, hey, even the water that I'm drinking, and it's like, that it takes a lot of effort to actually guarantee the quality of the water that you're having now, which is very, very important to have that refreshing in our minds from time to time. I would like to ask you this, because there will be some young, aspiring Dr. Liews watching this. I would like to ask you, what piece of advice would you give to your younger self?
You mean your advice to give to myself?
Advice for your younger self.
My younger self.
Uh-huh. If you have the chance to give an advice.
You mean to my students?
It can be your students, or it can be like, imagine that way you were in your early years.
Oh, okay. Well, I think I would tell my students that they need to keep on continuously learning, because learning never stops. Life is a whole process of learning. I think that's one thing that people need to understand. And of course, it's not just, when you learn, you need to be wise in terms of learning, like what Albert Einstein said, learning is not just about, getting information, it's also about critical thinking. You need to learn how to think critically, to learn new things. You don't just accept whatever, all other people say, because we are living in a, so-called, we are living in an environment where there are a lot of fake news and so on. Okay, so a critical thinking is something important, I would tell my students. And of course, one very important thing that I think a lot of people take for granted is that learning and education, that's one thing, but the end of education is that person's character. Mm-hmm. So in the end, if you can be very well educated, a lot of awards, but people see that your character is no good, then what's the point? Mm-hmm. So I would tell my younger people, the students, the younger generation, all these things.
I cannot find a better way to find this episode a closure. Thank you very much.
Thank you very much, Fabian.
How can people find you?
Well, they can go to my LinkedIn website. That's one thing, so they will know roughly who I am. Of course, I think you have my name card. So if people meet me, I will give my name cards to them.
That's pretty cool. Dr. Liew, everybody.
Yeah.
And for people out there, please stay safe and see you when I see you. Bye.